Hey guys, so welcome back to my YouTube channel again. This is the part 2 of commodities trading series, right? If you've just not watched the part 1 or you don't know how to basically trade commodities, I will suggest you to first watch the part 1 and come back at part 2. So in this video, we'll be talking about how to trade gold over here uh, on the different types of contracts which are available. So there are four different kinds of contracts, which is basically gold, gold mini, gold guinea, and gold petals, right from the highest contract to the lowest contract being petals. So I've just logged into my Zerodha's brokerage calculator over here, where I'll be showing you every single contract of gold, how much do they cost, or how much profit and loss can you make in 1 rupee change of the gold contracts, depending on what contract do you choose, and also the overall taxes which are being applied in every single contract, right? So starting off with the smallest, which is gold petals. This is the smallest contract of gold, which charges only around 300 to 400 rupees in per lot of gold petals, and the overall charges would be somewhere around 2 to 3 rupees. So every 1 rupee change over here would be giving you 1 rupees profit or 1 rupees loss for gold petals. So beginners and all those who want to start trading in gold, I'd suggest you start off with gold petals as they cost the least, and only with one lot as low as 300 to 400 rupees, right? Coming on to the next contract, which is basically gold guinea. Gold Guinea again is a contract which costs somewhere around 3000 to 4000 rupees in between, and over here the total charges would be somewhere 20 to 22 rupees, and every 1 rupee change again would be giving you a 1 rupee profit or a 1 rupee loss in Gold Guinea. I don't know why there is not much of a bigger change, but I would suggest you not to trade in them because Gold Petal is giving you the same amount of returns over here, right? Coming on to the next contract, which is basically Gold M. Gold M stands for gold mini or micro. You can say whatever you want, but over here the total charges is somewhere around 100 rupees to 110 rupees, and the margin required per lot is basically 43 to 44,000 rupees, right? And every 1 rupee change over here would be giving you a 10 rupees profit or a 10 rupees loss for gold M. Now coming on to the highest contract over here, which is gold, which I will not be suggesting anyone to trade into other than if you have a capital more than crores, because here one lot costs somewhere around 4.5 lakhs, and total taxes and charges per lot is somewhere around 600 to 700 rupees, as you can see. So better not to trade gold simple contract, which is simply as gold, right? So over here 1 rupee change would be giving you 100 rupees profit and 100 rupees loss. So this was all about the contracts of gold, from gold, gold guinea, gold M, and gold petals. So all the beginners, I'd suggest you try trading in gold petals, as I myself trade in them, right? Because the capital required is small, and similarly you have to adjust according to your risk appetite to trade gold petals with a proper stop loss as well. I'll be further on telling you how to trade gold petals in the further of this video. So now I'm about to tell you how do you basically trade gold, because you're not going to see the chart of gold petals of MCX. You have to follow the XAU USD chart, which is the gold spot chart, which the entire world trades upon, right? So basically you'll find the same similar patterns of XAU USD and gold. The only difference is that XAU USD, which is the gold spot chart of the world, will be running through entire day by taking hardly any breaks of a few hours, like 1 to 2 hours. But gold petals, which is trading on MCX, it closes at around 11:30 p.m. and starts at 9 a.m. in the morning. So that is the reason why you have to follow the gold spot chart. So as you can see that this is a pattern, and there's a breakdown over here at somewhere 5th August 1830, as you can see over here, right? Now what you're going to do is, for example, if you have a capital of around 1 lakh rupees, right, you should not risk more than 1% of your entire capital on a particular trade. So 1% of 1 lakh would be somewhere around 1000 over here, right? So you should not be risking more than 1000 rupees of your entire capital of 1%. So what you're going to do is you have to calculate right now. If you're taking a trade right over here, your stop loss is right somewhere around 10 rupees over here, which I'll just put it over here right now. Yeah, so if your stop loss is 10 rupees, you should be taking only those many lots where if the stop loss is hit, you will not be losing more than 1000. So that would be around 100 lots of gold. So 100 lots of gold would be costing you somewhere around 40,000 rupees over here, right? So 40,000 rupees is only what you're going to put out of your entire capital. So if you actually see right now, 10 rupees is your stop loss, and you've got such a big target over here. Because this is a bit lagging in nature, you can see that on 5th August 1930 we got a breakdown and we saw a great fall from here to here. Similarly, in gold petals, if you actually see on 5th August 1830, the chart was somewhere over here, and you can see how much there was a big potential over here up till around 200 points, which is somewhere around 50 percentage of your entire capital, 50 percentage of your entire traded value. So you can see you have put 40,000 over here, you have earned 20,000 by risking only 1 percentage of your entire capital. So the gains overall of your entire capital is around 20 percentage of your entire capital over here. So that is why you should not follow the gold petals chart, you should follow the gold spot chart of the entire world. Similarly, remember that you need to properly analyze in each time frames and do it accordingly, and make sure that you be patient, because this big target has been achieved in 1 week. So this is good for swing trading as well with the people of low capital. Obviously, you'll have to keep a bit bigger loss. This is just an example. A bigger stop loss is what you need to keep, somewhere around 20 to 30 points, and adjust your lots as well. This is just an overall view that how you should be trading gold petals based upon gold spot charts. So just in case if you want to trade gold mini or gold micro or even the normal gold, you will still have to follow the XAU USD chart and see the same thing in the spot chart as well, because this will indicate you prior to what it is about to happen in the MCX. So that is all for the video, guys. I hope you understand and clearly trade gold according to your risk appetite. Make sure that you do not put a lot of money of your entire capital. Try to go small. First, try to do small lots and take care of your trade properly and be patient with it, because this is running right from 9 a.m. to 11:30 p.m. So do not try to sit in front of the screen all the time. Just keep alerts and leave your trades. Do not finger them. That is all I wanted to say. Make sure you do hit the subscribe button if you want to know about more trading and commodities. Like the next video will be on silvers. So that is all for the video, guys.